We're back on Morning Trade Live. Let's focus on retail earnings now, starting first with Home Depot. The stock is falling after the big box retailer reported weaker than expected third quarter earnings. The CEO pointing to consumer uncertainty and continued housing market pressure having a negative impact on home improvement demand. So here's a look at the chart. Here's the price action for the major players in the sector today as well. We've got Lowe's and Costco. We'll have a look at those as well. And so Home Depot shares are under pressure today to the tune of around 3.5%. As I mentioned, on some of that guidance that has been cut, people holding off on home improvement, weighing on shares today. And we're seeing it across the board here. Not as deep losses as we're seeing in Home Depot post earnings, but Lowe's is down about 1%. Costco down around 0.4%. So we are seeing some pressure amongst all three of those names today. Lowe's is up next on the earnings front, as we mentioned, and that's the focus of the morning trade. So joining us now for a closer look at this name is Marley Kayden. What are you going to be watching out in this report, given the prelude we've got from Home Depot, Marley?
It is very interesting timing, and we are seeing Lowe's move down after Home Depot's report, not as considerably as we're seeing Home Depot, down about 1% right now. But Sam, as we've been talking about, we talked about yesterday on Market on Close as well, these outlooks from Home Depot and Lowe's, Home Depot just coming first, give us some clues as to whether the consumer is still cautious and holding back on renovations and do-it-yourself spending. And that's what we're getting from Home Depot, whose customer generally is considered the most financially stable. So whether or not it translates to Lowe's, we don't know, but it could be an indicator. That's why we're seeing the sympathy move to the downside. For Lowe's reporting tomorrow, the third quarter, analysts looking for revenue to grow 3.3% year on year to about $20.81 billion. That would mark a reversal from the 1.5% decrease that it recorded in the same quarter last year. Earnings expected to come in at $2.97 a share. Analysts also forecasting that same-store sales will grow about 1%. Now, I think it is important to note that Home Depot only grew by 0.2% in terms of that same-store sales metric, while analysts were looking for 1.3% same-store sales growth. So they were looking for greater growth from Home Depot and didn't get even close. They missed by more than 1%. Lowe's has been on a downtrend since mid-September. Shares are below their key moving averages right now, down more than 8%, close to 9% just in the last month. Analysts covering the company, though, have reconfirmed their estimates over the past 30 days. They are going with what they're expecting. I have not seen any adjustments to those estimates in the wake of Home Depot's earnings, but of course that could change as the day goes on. Also want to note that Lowe's has missed revenue estimates 4 times in the last 2 years. But for Home Depot, their miss was actually on earnings, not on revenue. So will be interesting to see as this is sort of our barometer for the consumer and consumer discretionary spending and home improvement spending. And we got a lot of really negative commentary from management at Home Depot saying they didn't see the spending they expected, they didn't see the turnaround, and that this lack of storms really hurt them as well. So will be interesting to see if it also affects Lowe's similarly.
A lack of storms, so interesting. But yes, people holding back on DIY. So we're going to be watching if that translates into Lowe's numbers as well. Thanks so much for that, Marley. I'll talk to you a little bit later on. Let's trade it now with Tim Biggam, options strategist, Pilot AI. How are you approaching your example trade? Lowe's, Tim.
Yeah, taking a look at this stock, it has certainly been taken out to the woodshed in sympathy this morning, along with Home Depot, fast approaching major support around that 215 level. So I'm actually cautiously bullish on this stock, given the veracity of the recent sell-off. So I'm just going out buying next week's 230 calls, selling this week's 230 calls, only paying about 50 cents for that trade. So I like that term structure vol differential to about 50 cents greater this week than next week. And I'm really just looking for the stock to kind of maybe find a floor here and head slightly higher. I'm not looking for a rip-roaring rally at all. Certainly, I think the market generally might be in for a period of consolidation at best over the next several weeks.
Okay, a good look at Lowe's there. Down about 1.3% in the session alongside the other as far as a broader theme there. What are your sort of takeaways from the market action today, broadly speaking, Tim?
Yeah, I mean, it's about time is kind of what I have to say. We're back below the kind of cryptic 6666 level on the S&P 500 again. We got NVIDIA after the close tomorrow. And then Walmart before the open on Thursday. I think kind of a barbell approach there. Those will probably kind of tell the story where the market heads here. But I think we're overdue for a big sell-off. How low it goes here, be interesting to see. Will NVIDIA kind of save the day? So I think we'll bleed out sideways here. I think the highs we saw from a couple weeks ago probably will be the highs until the end of the year for sure. And I think we might find a floor somewhere around here, even though valuation's still stretched, growth still out there, especially in these kind of AI-related stocks.
Okay, we're just seeing the S&P 500. It's fallen through 6.6 right now. It's down about 1.2% in the session. Thanks so much for that, Tim, and getting us a quick look at Lowe's as well, option strategist at Pilot AI.